Welcome to the Lasser New York Real Estate Podcast. I'm going to be making predictions for the 2023 residential and commercial real estate markets in New York. Do not have a crystal ball. I'm not going to cite specific studies or data. Instead, I'm just going to speak in generalities based on my aggregate review of reports and other data created by experts in the industry and my firsthand experience representing co-op, condo, and HOA boards, developers, commercial landlords, and also handling many real estate lease and sale transactions. So the first place I'm going to start my predictions is just looking at the economy generally. And you may have heard that there is an inverted yield curve at this point in time, which is a sign of slow economic growth. Basically, the last 8 recessions have been preceded by an inverted yield curve. And what this means is that the 10-year Treasury rate is lower than the
3-month Treasury rate.
And that's what we have going on right now. So based on that and a whole lot of other information that I reviewed, I believe that we are going to have a recession in 2023, hopefully a mild one. How did we get to this point? As you may recall, during COVID, the government was sending out checks to people that were not working, and in addition, they greatly increased the money supply. They're basically just printing money. Now, this has caused inflation. In order to combat inflation now,
They've increased the federal rate and they're trying to decrease the money supply.
as a result, it's more expensive to borrow now. And this is slowing down the economy. And this is done to combat inflation, but I think the government is not going to be nimble enough, and they already have a sort of mandate to combat inflation. They're going to increase the federal rate at least a couple of more times in 2023, and I don't think they're going to be able to sort of put the genie back in the bottle, so to speak. And as a result, even if the economy doesn't need any sort of more downward pressure on inflation, it's going to be too late, and we're going to head into a recession. Hopefully there'll be a soft landing. Related to that, because I do believe there's going to be a recession, I think there's going to be an increase in bankruptcies and foreclosures in 2023. So I have that not great outlook for the economy. I believe there is going to be a recession in 23. And now I'm going to relate that to the residential and commercial real estate markets. Turning to the residential sales market, there's been a decrease in supply of homes over the past few years, which has resulted in price increases. More specifically, there's been supply chain shortages, which has hurt developers' ability to build new homes. There have been iBuyers like Redfin and Opendoor who have been purchasing homes in bulk, competing with your typical residential purchaser. And then there have been low interest rates, record low interest rates, which have made it affordable for people to purchase. And due to the lack of supply and the free money, prices have greatly increased, approximately 40% over the past 3 years. So there's been this big run up in prices. However, even though there's this big run up in prices, I think that prices are going to decrease. I don't think it's going to be a situation like we had in 2008 when there was the financial crisis and the Lehman Brothers collapse, where people were over leveraged in the market and people were getting no money down mortgages. The mortgage market is much more regulated now, and people can afford their homes. The 90%, from what I've read, 90% of residential mortgages have rates below 5%. So basically, with the coming increases in interest rates, or the current increase in interest rates, people are going to stay put. So unless they have a death, a divorce, loss of a job, then people are not going to be incentivized to move. The typical situation where you would see someone move is if they're going to downsize, or if they've already made a lot of money, they've been in the market for a long time. Even if they're not selling at the peak of the market, they've still had huge increases in the value of their homes over the course of, let's say, the last 10 years. So they can still sell at a nice profit, even if they didn't time the market perfectly. So I'm predicting a decrease, and actually the reason why I'm predicting a decrease is the way the market's going to work is you have those people that need to get out. I just mentioned death, divorce, loss of a job, or if you have new home builders, the developers, they're going to have construction loans due, and they're going to need to sell their new homes because the rate on their construction loans are going to increase. They're going to need to sell those homes, those new homes. And if you're going to sell a new home at a discount, that's going to have a ripple effect on regular home owners that are selling. And basically, it's going to decrease prices. So I'm predicting that the residential real estate market is going to have a correction or a decrease of about 10 to 20% in pricing in New York by the fourth quarter of 2023. I don't think it's going to be a major crash. I don't think it's going to be anything catastrophic, but I do think that prices are going to decrease. Shouldn't really affect you unless you purchased recently and have to abruptly sell. Next, I'm going to turn to the residential rental market. Residential rents increased outside of New York City during the pandemic. People were fleeing the city, and New York City rents went down during the pandemic as the inverse of that. However, now rents in New York City are higher than they were pre-COVID, and my prediction is that due to the pending recession, rental rates both inside and outside of New York City will be decreasing in 2023 due to the recession that I'm predicting. Now I'm going to talk about the commercial real estate market and my predictions for the commercial real estate market in New York in 2020-23. I'm going to start my predictions with the leasing side. Due to the pandemic, it's been tough sledding for commercial landlords. Personally, I'm not a fan of work from home. It appears that it's going to be here at least for a while in some form. Whether people can work productively from home, I think depends on the industry and, of course, on the individual. It's hard to build a team culture working remotely. And, for example, the law firm practice is an apprenticeship model. So I think it's really important that attorneys, especially younger attorneys that are earlier in their career, spend time in the office to get mentoring. And I also think there's a lot of collaboration amongst attorneys, especially in litigation or complicated transactions. So I think there's a real need to work in person, but that's just my personal belief. In any event, office vacancies in Manhattan are approximately 18 to 19%, and there's also approximately 10 million square feet of new construction of office buildings in Manhattan. So the supply is going to be increasing over time. So I think that's going to keep the current vacancy rate where it is and also put downward pressure on pricing. So I think in 2023, the leasing market will pretty much be, rents will be flat and not decrease too much, although there are some stories of or reports of landlords getting or receiving record rents, and I think that's been, and fully leased buildings, and I think that's really in new construction, such as in Hudson Yards, or there's a few new buildings in Midtown where the landlords are giving some pretty big concessions, but they're getting big tenants for decent lease terms and at record high rental rates. The occupancy rates for Manhattan office buildings are just under 50%, according to Castle Systems, which is a security company that tracks data through like turnstiles of their tenants where the systems are implemented. And During the pandemic, it was really an employees market. I think it's become more of an employees market during 2023 due to the economic downturn that I'm predicting. And as a result of that, I think you may see an increase in people returning to the office. I'm hoping that's the case, but we'll see in the year ahead. Another trend worth mentioning is conversions from commercial office buildings into residential buildings. However, that's really only feasible in buildings with certain plate sizes, and you see that the ideal plate sizes most commonly in Lower Manhattan. The office buildings in Midtown Manhattan are not really well suited for that, and in addition, there would have to be some changes in the zoning and building codes to make conversions from commercial to residential use feasible. So there's been a lot of talk about that, and I could spend a whole hour talking about that, but really I think it's just something that you're going to see more of in the years ahead and in 2023, but it's really not going to, I think, have a major impact on the commercial or residential market. The last topic I'm going to discuss is the commercial sales market. On the sales side, due to high interest rates and decreased valuations of office properties, I'm anticipating that commercial sales pricing and commercial sales volume are going to be flat in 2023. There are too many submarkets and nuances to the New York real estate market to cover all of them in detail in a short video, but I hope that you found some of these predictions to be entertaining and helpful. And if you liked this video and enjoyed it, please click like or subscribe if you're watching this on YouTube, and remember to make every day great.